Hello guys, welcome back to my channel. This is Soji and you are welcome to Soji Forex. In today's video, we want to continue from our previous lessons on support and resistance, and what we want to look at in today's video is entry and exit rule for trading support and resistance. So we want to look briefly at support and resistance, entry and exit rule. Now looking at my chart, you see that I've marked out my support and resistance zones. Remember, support and resistance are not a line, but they are zones and area in the market. And we said our rules for marking our support and resistance is that we mark out our points of failure and points of reaction. Our point of failure and point of reactions. And after marking that out, which is what we have marked out already, we need to know the rules. What are the rules? The criteria for guidelines for making our entry. Remember, we stated previously that whenever a support is being broken, it becomes a resistance. And whenever a resistance, for example, price is coming from the upside here, break through this support, right, and it break it to the downside. I see that market went back trying to go up. Unfortunately, this support has become a resistance and it resisted the price, and it came here, break the support to the downside. And now you can see, and that whenever the support is broken to the upside, if resistance is broken to the upside, it becomes what? A support. And you see that this particular resistance was broken by price crossing to the upside, and what we are seeing here now is a resistance. It's a support, I mean to say, because price has broken it and is coming to make a great test on it. So briefly, let's look at entry rule and exit rule for trading support and resistance. So whenever price is at a resistance zone, we are looking forward to a sell. When price is at a resistance zone, we are looking forward to a sell. Okay, let me illustrate that on this side. This line, this is our resistance zone, and this is our support zone. So when price move from this area and is at our resistance zone, we are looking forward let's assume this is another of our support resistance. So when price move from here to this zone, when price move to this zone, we have a resistance here. We are looking forward to do what? To sell, because this is a resistance. So our goal is that this resistance should be able to hold price and then bring price back to the downside. And as such, we need an entry rule in order for us to continue or for us to make a sell entry from this resistance zone. So what entry rule do we get? Number one, we need to get, because this resistance is in our higher time frame, so for us to make our entry, we need to get a reversal signal. And what is a reversal signal? We need to get a candlestick pattern or a chart pattern. We need to get a candlestick pattern or a chart pattern. Why? Because for price to move from a support to a resistance, it means that buyers are in control of the market. So we need a proof that sellers have come into the market and are ready to bring price down from that level of resistance. Because the level can only become a resistance where there are selling orders. There must be a selling orders in a level of resistance to prove as a resistance, because it is the selling order that will be able to bring the price down. So we need to know, since we can't see the people, we need a sign, we need a proof that actually sellers are in this zone. And what will make us to know this is by knowing the behavior. And this behavior is only ascertained by the knowledge of our candlesticks. So we want to see a reversal candlestick. We want to see either a hammer or an engulfing candlestick. We want to see a hammer or a bearish candlestick, or we want to see an evening star formation in this zone in order to give us a reversal. So any confirmation of this, or on our lower time frame, we want to see a chart pattern, which will be a double top. So which means that if this is our resistance and price move from here to this point on H4, for us to sell, we want to see engulfing candlestick, or we want to see inverted hammer. Or we'll go to M15, and then we want to see that there is a chart pattern, double top. Price will be able to come, go back, and then at the break of the neckline, we will now make our entry on an M15 at this level of resistance. So this is our entry rule. And if we are using a candlestick pattern, if we are using a candlestick pattern, price come. Okay, now let me come in form of a price. This is the resistance, this is the support, and we are using a candlestick pattern. Price will be able to come like this, to our resistance, and I want to see an engulfing candle that will cover up the first one. Now listen please carefully. A single one engulfing candle is not enough to prove that the market is reversing. We need a follow-up candle for us to make our entry. And what is the follow-up candle we are talking about? After this first bearish candle, we should be able to have another bearish candle, the second one. It is this second confirmation that should be our entry. Because most of the time, we know that they are selling orders at this resistance. But a single bearish candle that is not reasonable enough, price can decide to break it and continue to the upside. So this is our entry rule. And this entry rule is followed by an exit rule. Now, if you make your entry here, always know that your stop loss is at above this previous candle, the first engulfing candle, because price is not expected to go back there anymore. The number two things you need to take note of is if price should break this zone, automatically you are out of the market. That is for using candlestick pattern. Now, entry rule for chart pattern on your M15 lower time frame. That if you are using H4, and if you are using H1, it's M5. So on your M15 time frame, price will have to come. This is candlestick. Hit your support. Come back down. You must wait for the second leg. Price will come again. Hit it, and then it's coming down. At the break of this neckline, you now make your entry, and then your stop loss is always at above this high. This is your entry rule. Now, for you to exit this trade, what do you need to do? You are using a candlestick, and price now closes below this, and you have your entry at your resistance, at your support. If price break up the previous candle at the top after your entry, you should know that what has happened here is that price only come to make the higher low, and it break this level, is now continuing to an upside. So this process is very, very simple. And when price break this resistance, if price is moving and it's coming down, And after your entry, price went back and take you out, then it means you need another confirmation for a buy, because you are buying, what you are trading is support and resistant entry. So how do you make your buy at this resistant level? The same way price will break this resistance, you will wait for a follow up candle, bullish, another bullish follow up candle of the one that break. Let the move be clear. Let any of the candlestick pattern play out to show that a strong bullish movement is in the market. You get another bullish follow up candle and then you make your entry, okay, and then your stop loss behind. And if it is on a 15-minute time frame, price will move, it will break it, it will come back, test, retest, and then continue to the upside. So this is how to make your entry and how to make your exit. So let's look at this scenario on our chart. Now look at this scenario. Price came from this upside and then break through this level of resistance. Sorry, it was coming from up. Here is a support. So this candle break the support. But look at what happened. Price went back, and then if you were to buy at one of these candles, you realize that price keep playing around that zone until there is this significant bearish move. That is a clear sign that truly sellers has come inside. And afterward, price came back and then retested the zone. Look at what happened. Give us a bearish. Here what you are seeing inside here is an evening star. Give us an evening star candlestick formation, followed by another bearish significant move, which confirms this entry. Another one here, price break through this region, pull back, and then gave us this pin bar formation. And then here is another confirmation. Price came from this support, break through this resistance, first bottom, second bottom. Now look at confirmation from this zone. Price gave us a pin bar. So this rejection is our confirmation. This pin bar formation, you can see that it is still the same zone that is being extended up to this point. That is it. The same zone. Look at the zone. Price came, engulfing candle. You can see how far it went. Now let's go to M4 to find M15 to find these zones on our lower time frame and to see the type of chart pattern it gave us. First and second. So price will always come to form this pattern, and that is where the TDI most importantly come into play. First and second leg. Most of the time this chart pattern is formed around our lower Bollinger Band. The chart pattern is formed around our lower Bollinger Band. And the advantage, look at it, you can make your entries. Personally, I recommend H1 for making entries based on your candlestick pattern. H1 is enough. And look at what happened. We have our double top, and this double top happens around the zone. So you will have the patience to wait. Okay, this and this, and then you can see that from this side too. We have this and we have this. So this is the entry rule for trading support and resistance. When price break, it will always come to a retest. And if you are using a candlestick pattern, always wait for a follow. And I believe you are gaining value from this video. Please do not forget to like, share and subscribe. In our subsequent video, we'll be discussing more about trend line and also candle by candle analysis. So see you in the subsequent video.